So the topic of my webinar is catch the trend using open interest. So let us understand the flow of the webinar. We'll start with what is open interest. Then we'll decide how to check the levels and trend of the open interest. Then we'll read the comparative OI chart. Then we'll discuss the different scenarios of the comparative open interest chart with the help of the spider. And then we'll check then we'll learn how to check the sentiment of the market. Okay, so let's start. So what is open interest? The total number of outstanding derivative contracts such as options or futures that have not been settled for an asset is an open interest. Though it is a small concept, it plays a vital role to find the trends and levels. Okay, so basically what is open interest? Open interest can be defined as all the derivative contract which are open in the market, like which are not settled or which are not squared off. So that can be termed as open interest. Okay, so let's I hope you understand the meaning of open interest. Let's move on how to check the levels and the trend of the open interest. Okay, so one can find out the levels using open interest OI charts and trend using comparative open interest chart in our software. Okay, so when the open interest is maximum in call writing, that simply indicates the trend is going to be bearish. When the open interest is maximum in put writing, that simply indicates that trend is going to be bullish. Okay, so while understanding, like while reading the open interest, we need to understand like why we read the open interest from the seller's perspective. Okay, so we read open interest from the seller's perspective because they have the highest stake in the market. The second thing, they require a lot of margin to in the market, and they are accessible to unlimited risk. So that is the reason we always check the open interest from the seller's perspective. Okay, so let us understand it in a better way from the software. So we'll understand the levels first. So I am going to the chart part, and in that we have a option OI comparison charts. Okay, so I've opened the tab here. See, it is already opened here. So I'll select Nifty. You can select any stock over here, whatever you want. So I'm selecting a Nifty. Now there's an option says show strikes between. Okay, so I'm going to range my strikes for the day. So so I'll give the range up. See, my spot is at 18,560 568. So I'm going to range it 1,000 point above and 1,000 point below. So I've given the range of 17,650 and 19,650, and the step would be in 50 steps. Then I have to select all the strikes over here. See, I have to click on this. After that, when you click on refresh, you will get the data over here. Okay, so now you can see there are some green bars and some red bars over here. The green bars are indicating the call writing, and the put bar are all in red color. Okay, so now when we are reading it, we are going to read it from the seller's perspective. So we are already ticked on the current OI. Okay, what is current OI? Basically, the current OI is the from when the contract is started till now, the data of the open interest. Okay, it is the current OI. Okay, so now if you can see the highest open interest buildup is on the strike of 18,700. Okay, so now I'll just open yeah, so now I'm just connecting my chart to intraday 3 minutes. I'm just zooming in out the chart. Yeah, so you can see in today's market, the open interest levels. Sorry, the levels we are going to check. We are going to check the levels of the market right now. So 18,700, where we have the highest put writing OI. Okay, so that level is going to act as a resistance level for the day. Okay, and if you check this, the highest OI build up in put side is at 18,600. Okay, so at 18,600 strike, you can see that there was a strong support. The market took two times market took support 2 times over at this range. After that breakout, it turned to be bearish. Okay, so once it reaches this level, it is going to turn into the bearish or bullish pattern. See, if it would have broken the level of 18,700, the market would be bullish for the day. Okay, so these were some important levels. Now, as we have understood the levels, we are going to see how we can see the trend of the market. Okay, so now how to read comparative OI chart. Okay, we can see for the level. Sorry, we can see the trend from the comparative open interest chart. First thing, we need to check a view should be from the sellers or the writer's perspective. Okay, so now I have some examples over here. We'll just discuss the examples. See, you can see this red line and a green line. Okay, this line is from the call put cumulative line. Okay, see, you can see there's an option over here, call put cumulative. The line is for that. So the green line denotes basically call writing, and the red line denotes basically put writing. So see, we generally check this data from 9:45 to get a confirmation. Okay, so before that the market is not settled, so we always prefer to check the data after 9:45. So when I have made a box here, a table here, you can just refer the table. See, call writing rising, it tells us the bearish trend. So we'll check. See the call writing. If you can see the red line, that is call writing line, was rising. So basically, this is showing that the market was at the call side. That is a bullish market. We'll check. See, call writing rising. Sorry, put writing rising. The market was bullish. So you can see the red line, that is put line, was rising. So the market was bullish for the day before yesterday. Now you can see selling of the call rising. So it indicates bearish market. Okay. So now you can see the call writing was increasing after that. So the market turned to be bullish after that. Sorry, the market turned to be bearish after that. So you can see there was a short buildup going on here. Now, whenever you see such kind of data here, you can see the data of from 14/12 to 15/18. The data was falling. The put writing was also falling, and the call writing was also falling. Okay. So whenever this kind of data is there, it just indicates that there people are covering their short position, or whatever position they have made. Okay. So you can see the call writing was rising from morning. So it gave us the signal that it was a bearish market on Thursday. This is the data of Thursday, and you can see the put writing was falling. So there was a crossover. So whenever there is crossover in this call put cumulative lines, okay, it indicates aggression. See, there was an aggression in call writing. So whenever there is aggression, the premium rates will also be rising, and there will be good movement. You can find a good momentum basically at this time. You can see the divergence of call line and the put writing also. So whenever there is such kind of market, you can see there will be a good movement over here. Okay. So after that, the market started contracting, and it was in a range. Okay, it was in a range till 12, that is 212. After that, suddenly market started gradually. A market started, well, the put writing also and call writing also started falling. Okay, so basically when there's falling in the market, that means the people are covering their positions. Okay, that means there was a short covering going on over here. Okay, now I hope you have understood how to read the data of a call put cumulative. Let's move on and let's see today's market. Okay, so we'll go to charts. There's an option over here, competitive open interest chart. Okay, in competitive open interest chart, I'll just remove all this selected. Yeah, yeah. So you can see there is a if you want to select a single derivative, you can use this option, that is select one derivative. Now, if you want to select one plus derivatives, so you can select from this option, but you can add only 20 strikes over here. So we have added a feature over here in our software, that is one UL. So we'll select the underlying as Nifty, and the expiry are here. You can select the expiry. I'll select the expiry. After that, we have to give the range to the market. So the range would be 17,650 to 17 sorry, to 19,650. Okay, after that we'll select all the strikes over here and we'll draw. So basically now you can see the count is 82. Okay, so you can add so many strikes over here. Now basically I'm going to select from the 1 plus derivative. So we'll select from 1 plus derivative. I'm selecting the Nifty over here as my underlying. Then my expiry would be first expiry, call put cumulative. Then we'll select futures as continuous. Then the option will be I want both the options in the money and out of the money. So I've selected all. Then we have to take on this option strike within 1%. So basically it will give us the data of above the range, above the spot price 1% and below the spot price 1%. Okay. So after that we'll select on show. Then we'll add the strikes over here. So basically my all the strikes are added here back. So I'll now quit this window. Now we'll start draw this. So while after this adding the strikes, we have to go to intraday today. Okay. So once you go to intraday today, you have option here as OY data as. So basically you have two options over here to see your data. First one is as quantity wise and second one is lot wise. So I'm selecting it on the lot wise. Okay. After that, if you see OY data as, again you have three options over here. The first option says absolute. That generally means that it is going to give you data as per the value based. Okay, like it is going to give you the data in figures. After that, if you see a percentage change, that generally means it is going to compare the data with the previous day and it is going to show you the data in percentage format. Okay, so it is going to so we are going to select this percentage change for the day. After that, also there is the third option, change. So basically this change is compared with today's opening. Okay, so if you want you can select this too, but I'm going to select the percentage change today. Okay, now we have third, that is chart type. Okay, again there are three options over here. So the first option is detailed one. Okay, so in order to find a good strike price, like a good moment, if you want to find the strike price which has the maximum momentum for the day, you can select this from the detailed chart type. Detailed chart type, yeah. So we can see the options here is increasing. So I'll just broaden this up. So you can see the writing of this strike price was actually this strike price was on the top. So basically it has a good momentum. So we'll see when I'm clicking on this the strike. So basically I got the information of it. So it is the strike price of 15th June, call option 18,550 strike price of Nifty. Okay. So basically today, in today's day, this strike price had a good movement, and followed by that there's again strike price of 18,450 call option. Basically I've already discussed it before that we see this data from the writer's perspective. So basically see, call writing was going on, so the market was expected to be bearish. Okay, so we'll select on the call put cumulative. Now we are going to see the market as previously discussed. We always see data after the 9:45 time because we let market get settled. You can see after 9:39 gradually that put there was a crossover. So the put writers were aggressive, so they started because of that aggression the put writing started rising. Okay, the put writing started rising, that means the market was bullish for that moment. You can check on this. I'm setting the we'll check on the market. So basically you can see the data. Just so you can see here during this time, that is 9:45 till 9:51, and you can see till 10:06 you can see say till 10:06 market was 10 bullish at a movement. Okay, so you can see the data till 10:09. Okay, till 10:09 market here the till 10:09 the market was showing to be bullish in this data of our open interest. Gradually put writing started decreasing. Okay, and call writing started rising. Okay, there was an aggression in call writers. Okay, due to which market turned out to be bearish for the day. Now you can see that after the crossover still the call writers were increasing. And after that, you can check on between 11:03 to 11:30. Again, the call writing started decreasing, and after that, it was stagnant. Okay, so during this stagnant market, you can see there was a consolidation zone. Basically, it was in a range. So you can see that when the call writing and put writing are parallel to each other, then they are going to be they are going to be in a range. Okay, so basically this was in a range. After that, you can see again the call writers were aggressive, and they started on the call writing started on increasing. So whenever you can see this kind of data, like where the call writing and the put writing have the divergence, okay, you can find out an impulsive movement at this time. Okay, so you can find that the market would be in a single direction. So today's market was a directional towards bearish, towards, you can say, put side. So that is so you can see here it was falling, and after that, after 239, the put writing and call writing again started to decrease. That generally means that people who had positions were squaring off as the market was tend to close at 3:30. So that is what this at this period you can see always that the mostly the market will start for like the call writing and put writing will fall. That generally means there people are covering their short positions, or you can say there is short covering going on here. Okay, so after again we'll go to the presentation. So now how can we check the sentiment? Okay, so basically how we check the sentiment, we can check the sentiment through PCR, that is put call ratio. The PCR ratio is formed when total put open interest is divided by total call open interest. Okay, so basically PCR is what? When a number of put side open interest is divided by number of call side open interest. Okay, so whenever whenever you want to find PCR, you can just find it out easily with dividing the open interest of put side by call side. And if you get the answer that is greater than 1, it intends that the market will be bullish for the day. And if it is less than 1, it can be bearish for the day. Okay, so you can find this PCR option in our software in comparative open interest chart. You can see the below call put cumulative, you can see there is a call put ratio, that is PCR. Okay, so see in morning the PCR was above 1, and there was a, you can read the chart basically from normally how you read the line chart. See uh, initially if you see, the market was forming a higher high structure. That means it was giving an indication that market can go bullish, but gradually it started falling from 10.9. Okay, and it made lower low structures. Okay, and after that it started on falling and falling. So after that, you can see that you can check below 1, sorry, above 1, the market was intended to be positive, but after 1 PCR ratio, it started to fall, and below that it indicates a bearishness. Okay, okay. So now I also want to introduce to a thing, that is refresh seconds. Whenever you are connected to the live market, okay, you need to if you want to refresh it as automatically, so you can refresh this with the help of 1. You can add the refresh second as 1, so it will refresh it after every 3 minutes. Okay, because the open interest comes after the gets updated after every 3 minutes. So after, if you keep the refresh seconds as 1, so you can see, check on it. Now once again we'll understand the summary. Okay, we'll summarize what you've seen today. So we've learned about what is open interest. So the total number of outstanding derivative contracts, such as options or futures, that have not been settled for an asset is open interest. Okay, so though it is simple concept, it plays a vital role to find the trends and levels. After that, you can see how to check the trends and levels. So you can check levels from you can go to charts. There you can find open OI comparison charts, and in that you have to define the underlying, followed by the range of the strike. After that, you have to see the check, like if you want to steps in 50, so it will show you in 50, and if you want it as 100, you can select 100 over here. Okay, now again we have a new feature over here, that is in last 15 minutes. Okay, so whenever you are using this OI comparison chart, it always compares. So if you see on this current OI, it will always show you that the from when the contract is started till date the data open interest. Okay, so if you want that open interest generated in last 15 minutes, you have to select year 15, and you can see here the option here is difference in last n minutes. Okay, you can define here till 1 hour time frame till 60 minutes, and now when you select on this, you can find out the date the difference in last 15 minutes. So basically in last 15 minutes people were unwinding their positions, so that is why the open interest is seen as upside down here. Okay, so people have been the contracts has been closed here, so the data is in this such format. Okay, so now I'm going to select this current one. After that you can select, see, I'll just summarize you, wherever the highest OI buildup is in call side, it is going to act as a resistance zone for the day. And whenever the OI is the highest at the put side, you can see that there will be a support over there, and after that, once it breaches the support line, it can be bearish for the day, and once it breaches the 18,007, like the resistance zone, it can be positive for the day, that is bullish for the day. Okay, so after that we'll see that the trend. How can we check the trend? So to check the trend, we'll go to again software. In software you can find out comparative open interest chart. So in OI comparative chart, you can select a window. You can open 3 windows. So I've selected a single window over here. I just broaden this. Yeah. So now you have 2 options over here. If you want to select a single strike, once. Yeah. If you want to select a single strike, so you can add a single derivative strike with the help of this single derivative. Then if you want to add more than one strike, you have an option that's a 1 plus derivative, but you can add only 20 strikes over here through select derivative. So after that, if you want to add more than 20 strikes and you want a clear view, so you can also use this new feature, that is one UL. In that you have to select underlying. After select underlying, you have to give a range over here. Once giving range, you have to select the option type, and then you have to select all the strikes over here, and you have to select on draw. So it will draw the data over here. Then we'll go to any event. Then we'll select intraday today. If you want today's data, you can select on intraday today. The OI data as on, if you want to see as quantity, you can select quantity. If you want lots, you can select lot over here. If you want data, OI data as absolute, means a value based, and it is going to compare the data with yesterday, that is previous day. And if you see percentage change, again here the data is going to change with the previous day, check with the previous day, and it is going to show you the data, and it is going to show you the data in according to the percentage change. Okay, and you can see if you want to select this change, if you select this change, it is going to the data is going to be uploaded as compared to the today's day opening. Okay, so it basically the data will be compared to today's open, and it will be plotted over here. And after that, you have 3 options over here at chart type. Details means whichever strike price you have added here, they are going to be plotted over here, and whichever strike is at the top. Okay, and after followed by the strikes, and you can see the highest momentum over here. The strikes will have good movement, so you can select the strike of Nifty at Nifty 18,700 call option. Okay, it had a good momentum for the day. After that, you have call put cumulative. So number of call and put option, like number of call strikes are added and plotted over there, and number of put strikes are combined, added and plotted over here. Okay, so it is the cumulative here. See, whenever the put writing and call writing are rising, like whenever the call writing is rising, the market will be bearish, whenever the put writing is rising, the market would be bullish, and wherever the strikes are like the call writing and put writing are falling, the market indicates indecisiveness. And the second thing is the market is there is a covering going on in the market. Okay, the people are covering the positions, and we'll go into the presentation. We'll see the option. We'll see the scenarios. So basically, the example I've taken here is of Thursday. So you can see the wherever there is a crossover, there would be an aggression in the call writing and put writing. You can see here in the second example, see there was a crossover, there was an aggression of the call writers, and the call writing started out, and there was the market was towards the bearish trend. Okay, and whereas the put writers were not that strong for the day. So you can see a range, and this kind of whenever this kind of structure is formed, you can see there will be a bearish market, and there will be a strong bearish indication over there. Okay, so thank you so much, sir.